Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Russia's president rejects Donald Trump's 30-day ceasefire but agrees to limit attacks on Ukraine's energy infrastructure. Germany's parliament passes a landmark package to boost defence and infrastructure spending, while EU Commission President Ursula von der Leyen says Europe must step up its defence capabilities as the bloc meets in Brussels. Plus, the Bank of Japan holds rates steady. Governor Ueda says uncertainties stemming from US trade policies are high. Up next, the Fed and its forecast, with some expecting a stagflation scenario for the US economy.
OK, as Anna says, it is Fed Day in the USA. That's the big event. That's why futures aren't moving. Euro Stoxx 50 futures absolutely becalmed this morning as we await the Fed. Yesterday was obviously a very big day. US markets got hammered. They're not recovering this morning. That is what futures are telling you right now. Euro dollar, big day yesterday as well. That begins to fade a little bit. We're down by 0.2%. And keep an eye on what is happening with Turkish assets. The Istanbul mayor, Imamoglu, has been detained. It looks like we're going to have political problems once again in Turkey. Turkish assets, look at the stock market. It's just opened. It's down by nearly 7%. The countdown to the opening trade starts right now. Wednesday the 19th. Good morning, folks. Fed Day in America, but we are talking more about what is happening with the geopolitical story as well. We need to figure out what happened yesterday in this conversation between Vladimir Putin and Donald Trump. The Europeans are sceptical. The Ukrainians are sceptical. Trump's calling it a win.
Yes, Trump is calling it a win. Russia has said they're prepared to limit attacks on energy infrastructure. Some discrepancy about whether it was just energy infrastructure or infrastructure and energy. From our reporting, it seems at the moment to be the former. The Russians also want to see an end to arms shipments. The Europeans don't seem to want to play ball on that one and want to keep sending arms to Ukraine. So we'll see how that one develops. But I think taking a step back, what is really interesting from the readouts from this call from both sides is that the emphasis for both of these countries is really on the wider relationship between Russia and the United States. So, yes, of course, Ukraine matters, and if you're European, Ukraine really matters. But what mattered very much here was a reset in relationships, and whether that is around the China relationship or whether that's around what Russia can do for the United States in the Middle East on Iran, all of these pieces seem to be in play when we try to talk about Ukraine.
It's the reverse Nixon, isn't it? It's this idea that you need to separate maybe Russia away from China in the way that Nixon tried to separate China away from Russia, or the USSR as it was at that point. Is that what we're seeing in play here? As you say, a bigger political story, geopolitical story, maybe unfolding here. But I also think that there is a Ukraine-specific angle to this, and I do wonder whether or not Republicans in Washington are now going to say the Ukrainians have signed up for this deal. Like they're up for a 30-day ceasefire. Russia isn't. Should we now be applying more pressure to Russia to get it to do what we want? And will Trump go along with that? And is that going to be a source of tension within the Republican Party in Washington? I think the next few days will be fascinating on that front.
And there is no ceasefire yet, is there? No. And so we watched what happens tragically on the ground in Ukraine as these conversations continue. And of course, Ukraine suggests that Russia is just stalling for time. And there is the potential for things to develop on the ground that then come back and influence how the US responds in this, perhaps. Guy, we've also, with defence in mind and military manoeuvres in mind, have to think about what's going on in Europe right now.
Well, let's talk about what happened yesterday.
Stunning day.
So in a historic day for Europe, I think, in so many ways. The Trump story, the Putin story, part of that. But Germany is rearming. Germany is mobilising. This is a huge moment, a post-Second World War moment to recognise and think about the implications of. We often talk about fiscal bazookas. This was actually a fiscal bazooka in so many uses of the word bazooka. And I think it's going to be really interesting to see ultimately how far this takes the European story, the European asset story. Germany is moving forward. But does the rest of Europe have the fiscal space as well to think about the ability to match what is happening in Germany? Are European investors confusing German fiscal space for European fiscal space? Ursula von der Leyen is now talking about pan-European acquisition of weapons systems. There's a lot going on here, but are we talking about a timeline that is decades in the making?
Yes.
Or is this something that can be happening much more short-term and has a real impact in terms of assets here and now?
Yes, and as we've said, the extent to which Europe is able to buy European might be dictated by that timeline.
Yeah.
In the very short term, you might be buying not so much European. Maybe later on, you get to buy more European. I think, obviously, this matters from a defence perspective, and that's what a lot of this is about. But there's also the infrastructure part, and there's also the links between this and growth. And from an economic perspective, we focus on that as well. And what kind of multiplier we get from this. Interesting lines coming out of the DIHK, that's an industry lobby in Germany, really urging Germany, saying, you know, this is a lot of money, spend it really carefully. I was at an event yesterday, and a lot of people talking about these multipliers. They're excited in the sense that there will be more growth than they'd previously thought, but any other certainty about just how much this leans into European growth is a little cloudy.
Europe is traditionally bad at spending money at this kind of speed and scale. We talked about it when we had the post-COVID spending plan that came out of Brussels, and how Italy was going to struggle to spend this money quickly and effectively and would deliver a big sort of bang for the buck. And I just wonder whether or not there's some of that going to be represented here. And again, I come back to this timeline about how shovel-ready some of this stuff really is. But it was interesting. I was just talking to Thanos Pavasavas, who's going to be coming on very shortly to talk about this as well. Has there been a tone shift? Has there been a kind of, we need to, growth is now important. And that's a big shift both in Berlin and Brussels.
Yeah.
We need to rearm, we need to get this economy back on track, we need to deliver. And that tone shift maybe is what investors are hearing. Yes,
absolutely. If you're hearing that message in Berlin, you're hearing that message in Paris, and you're hearing it in Brussels, and you've heard it from Mario Draghi and other big voices, titans of the European political space, then it does seem as if something has changed, and mobilisation of that is going to be on somebody's agenda. Let's talk about what lies ahead then, Guy, because of course we have a Fed meeting coming. Nobody's expecting any change in rates today. On hold seems to be the focus, but we get the dots. I wonder if we have too high expectations of the Fed and the dots, because yesterday I think we were having a conversation about whether this was really going to clear up what the Fed thinks about Trump policy. But Trump policy is still evolving. President Trump, yes, he's been in the White House a little while, but his policy is still evolving. We're not at April the 2nd yet. We don't know what the tariffs look like. And so is it too much to expect that the Fed will have factored in the full complement of policy change at this point?
So we often talk about a kind of a hawkish hold, or a dovish hold, or a dovish hike and a hawkish hike. Is this an uncertain hold? Is this a wait-and-see hold? How should we think about this hold? Always want to read the Nick Timmer's piece just before you get to a Fed meeting. He's usually got some interesting clues. And basically what he's signalling in the piece that he's written this morning in the Journal is basically the Fed doesn't know. The Fed is going to wait. And the Fed can wait for a very long time. And on balance, it's more worried about inflation. So on balance, therefore, you could argue that uncertainty equals hawkishness. Is that the takeaway from this?
Well, is that the message we will be left with later on? That's key, isn't it? Because, yes, I know Valerie was saying that she thought that did have that slightly hawkish tilt to it, that Nick Timmer's piece. We'll speak to her later on with her assessment and get an assessment from guests as well. Because you can imagine a Fed that leans on the inflation expectations and worries there. You can imagine a Fed that leans on its concerns around growth, and that's where we get to stagflation. And depending how far you are on both of those trajectories, you come to a stagflationary conclusion of some sort.
So Torsten Slok at Apollo has been writing about a wait-and-see economy. I think we have a wait-and-see Fed. And I think that is kind of where we are right now. The Fed's not the only game in town today, though, is it? We've got the BOJ to focus on, too. I'm struggling to kind of get a clear message out of the BOJ this morning.
Yes. Absolutely. Yes, I mean, we have a few lines around wages, and that seems to move things around. The Bank of Japan Governor Kazuo Ueda is holding a press conference, as you can see there on your screens. I mean, no surprise that there is reference from the BOJ in the statement, and then Ueda again also referring to it about the uncertainties around tariffs, because globally, especially if you're a currency that has moved quite so much as the yen has, and with policy that was as loose for as long as it was, and the yen was as weak as it was, that's been in the crosshairs, hasn't it, for Trump and the Trump administration. No surprise there that they're focused on tariffs and wondering what tariffs do. But there were some comments earlier about wages as well, and that did seem to move the yen a little. But we are now sitting with we've got the yen down 0.1% or so not a huge movement net.
Yeah, the BOJ saying it doesn't have tools to directly impact rice prices. That's a story that we've been focusing on. It gets very much into the weeds, I excuse the pun, in terms of what is happening there. But these central banks have got a kind of domestic narrative, which they're dealing with things like rice prices and kind of what is going on. But they've got this kind of overarching what happens with tariffs, what happens next kind of theme as well. And trying to mesh these two together, particularly for the BOJ, I think is really quite, in fact, for all central banks, is really quite tricky at the moment.
Yes, and what we're really looking for from Ueda is any guidance as to how quickly the next rate hike comes. Maybe that's too high an expectation, maybe we won't get that, but the yen has certainly pulled back from some of its earlier weakness. We saw it down at the 150 level. It's now 149.48. We'll continue to monitor, of course, that press conference coming to us from Japan.
OK. Thanos Papasamas, we just mentioned him. He's going to be joining us very shortly from ABP Invest. He's the CIO over there. We'll talk about what is happening ahead of the Fed. Olivia Wassenaar, Apollo, Head of Sustainability and Infrastructure. Perfect person to talk to. What is happening in Germany? What is going to happen in Germany? How should we invest in that? And Bettina Mazzocchi, BlackRock, Head of Wealth Solutions for EMEA, is going to be joining us a little bit later on. Should we translate what has just happened in Germany into ongoing gains for European assets? And I think that is going to be a question that I think investors increasingly grapple with. We've seen some early gains. Do those gains continue? OK,
what else have we got coming up today then? I mean, basically it's Fed Day. That's the headline. But we also have General Mills earnings before market, the Fed rate decision, the Fed news conference. Remember, those come for European audiences an hour earlier than they would have done because we are that hour closer to the United States this week, as we were last week, and we will be again next. And we have a Brazilian rate decision as well. Other stories we really need to focus on, from tech to geopolitics in Turkey. Let's talk about Nvidia. We want to focus on what is happening there, because obviously that was one of the big stories out yesterday. Failing to boost its share price yesterday. Remember, it's already down 20% from its January peak. At its annual developers conference, CEO Jensen Huang unveiled more powerful chips that he said will provide a clearer payoff to customers, including a successor to Nvidia's flagship processor called the Blackwell Ultra. We're now talking about Rubin. That's the next iteration of what is going to be doing, and then there'll be a Rubin Ultra, apparently. There was also news of partnerships with companies like General Motors, Walt Disney, and Google's DeepMind. Two NASA astronauts stuck in orbit for 9 months have finally returned to Earth in a SpaceX craft, capping a saga that captured international attention and deepened America's reliance on Elon Musk's space company. The pair, seated inside a Dragon capsule, fell to Earth under parachutes and splashed down off the Florida coast yesterday evening as roughly 2.4 million viewers tuned in to the SpaceX live stream. They were welcomed home by a pod of dolphins. The pictures are quite incredible. Take a look. So long and thanks for all the fish springs to mind. And let's talk a little bit about what is happening in Turkey right now. Turkish stocks, a few minutes ago, opening sharply lower. This as one of the country's most prominent opposition figures, Ekrem Imamoglu, the mayor of Istanbul, was detained at his home. It is a move that could bar him from challenging Erdogan in the next presidential election. The mayor's detention by Turkish authorities follows a series of investigations and lawsuits against him, including a potential sentence of more than 7 years in prison and a political ban. So Turkish assets taking this very badly. Yeah, absolutely. So at the open, and that comes, of course, just before the top of the hour in Turkey, we saw stocks drop by just shy of 7%. But then they were promptly halted. They're going to be restarting at 10:30 local time. So we've seen a halt to trading because of this steep decline, because of the arrest of somebody who's widely considered to be, or was going to be, the next presidential rival to Erdogan, because was certainly going to be the opposition candidate for that presidential race. And so as a result, stocks have dropped. That's no surprise. The pre-market was weaker. Yields have risen. And this isn't the first time that we've seen President Erdogan clamping down on rivals. No. And you see the reaction in the Turkish lira. That's more controllable, and Erdogan has in the past exerted significant control over that. So what happens next? Can we extrapolate from this? Should we assume from this that Erdogan is nervous? And if he is, do we see other changes coming through? And I think that's what the market's going to be thinking about today, trying to understand whether or not we go back to the unorthodox economic approach that Erdogan has operated under previously. Now, you've got people like Şimşek in power now, obviously running the finance ministry. Is he going to be a steadying hand on the tiller when it comes to the economic story? But at the moment, it does seem as if Turkish assets are taking this quite badly and are quite nervous about kind of what comes next. Yes, and our colleagues pointing out that Turkish equity markets are mostly dominated by domestic investors, who, of course, will be following this, very reactive to this story, and things could be volatile. So we continue to bring you the latest there. Coming up on the programme, we'll also talk about the banking sector. Morgan Stanley is planning to cut about 2,000 jobs. We'll discuss the first major workforce reduction under Chief Executive Officer Ted Pick. Plus, VW will raise its stake in commercial vehicle maker Traton. We will check on that stock at the open. Up next is Fed Day, and it's all about the outlook. We'll dig into the details there. If you have any questions, if you want to get involved in any of these conversations, IB plus BBTV Go. That is the function to use on your Bloomberg terminal. This is Bloomberg.
We are, circa 40 minutes away from the start of trading here in Europe. This is the picture at the moment. Nothing to see here. Why is there nothing to see here? Well, there's quite a big event coming up on the agenda a little bit later on today. Now, normally we'd have been talking about this for weeks. We'd have been going through the minutiae, kind of analysing every twist and turn into this Fed meeting. There's a few other things going on at the moment, which I'm not sure has downgraded this meeting's importance. I think it's still quite important. But what signal are we going to take away from it? Is it going to be hawkish? Is it going to be dovish? Or are we about to see an uncertain halt? Valerie Teitel is here to answer that question. Val.
Guy, we didn't get the Trump put. Are we likely to get a Fed put on the cards today? I want to walk through two scenarios, either a dovish tilt or a hawkish tilt from the Fed later today. Let's start with a dovish message we could possibly get from Jerome Powell. He could do this by focusing on the deterioration of consumer sentiment and talk about the downside risks to economic growth from these tariffs, and in some way acknowledge the recent equity market wobble as concerning. He could also go as far as downgrade those GDP forecasts more than the market expects, showing that they might be there to cut into the economic weakness. On the flip side, the more hawkish message could be we cannot continue to cut with inflation expectations rising as they did. A lot of focus on the rise on the Friday UMISH long-term inflation expectations. It's something that they have reacted to in the past. Will he come out saying that, frankly, the Fed can't be in a hurry to cut interest rates with inflation expectations jumping as much as they do around this tariff uncertainty? Will he keep saying that monetary policy is well positioned and even say that the U.S. economy is still in a good place? Those are lines that he did tell us before the blackout period. I really want to know, does he continue to characterize U.S. economic growth as solid, or does he downgrade it in his mind like many economists have done recently?
OK. Lots of questions. Maybe we'll get some answers a little bit later on. Valerie, thank you very much indeed. We're joined now by Thanos Papasawas, founder and CIO at ABP Invest. Good morning.
Good morning.
What am I going to hear from Jerome Powell later?
I think it's going to be a hawkish stance.
OK.
I believe that the inflationary pressures are real, whether we're looking at the resilience of the U.S. economy.
Yep.
We can discuss about the noise in terms of the consumer confidence, but the underlying employment data is still strong. The uncertainty surrounding Trump events and policies would be expansionary and sort of concerning in terms of inflationary pressures. And the more important point is that the Fed cannot be seen to be wrong twice in such a short period space of time following the COVID mistake. So we expect a hawkish stance. We think the Fed stays back and observes the data in Q1, potentially warns and threatens policymakers in Q2 behind closed doors. And dare we say, we think and we still believe that there could be a rate hike in Q3 in September of this year.
That all sounds like a cocktail of factors that tells me I should be buying the dollar. Is it?
It may be positive, the dollar, but it depends on the underlying valuations as well. So from a euro point of view, the underlying fundamentals will also be supporting Europe. So there will be the interest rate differential will be working in favor of the U.S. economy, but the underlying fundamentals may not. And the key point there is, if the Fed were to decide between a weaker economy on the one side and higher rising inflation expectations, we believe that it's going to side with inflationary expectations.
And that's dollar positive or negative?
That would be dollar positive in that sense.
OK. Thanos, if you are at the Fed and you think you're going to be on hold for a little while, do you think you might be going out of your way to try and not be either dovish or hawkish too much today, to give very little messaging to the market? Because there is so much uncertainty around policy that we've not yet seen that could be inflationary. You think we'll get Fed hikes. But also there is this risk that the US economy slows because of the uncertainty. So isn't there a temptation to just not say much?
I think you're right, Anna. It has to be a sort of more nuanced message. It cannot be fully contrarian and hawkish, because even if we look at the latest numbers, the CPI, core CPI, PC, core PC, we all had a bit of a drop. It's not a significant drop, it's 0.2 or 0.1. But the Michigan indicators, consumer expectation, inflation pressures have been rising. So I agree with you. They're not going to go sort of strong with a very strong hawkish statement. But looking at the sort of reading the tea leaves, I think it's going to be more hawkish than neutral, just to manage expectations in terms of policymakers that the policies they're proceeding towards could be inflationary coming through.
Thanos, it's been an incredible week in Europe, hasn't it? We've seen this vote in Germany go through as expected. Didn't cause that much volatility in the end, but there was plenty of it in the run-up too. A lot of market readjustment. And John Author's, amongst others, writing at the moment about national capitalism, saying, you know, there's going to be a lot more emphasis on money being invested closer to home, whether that's dictated by governments or whether that's just an investor impulse and sort of barriers being drawn up between regions. How is this thinking, this big picture shift, how is that thinking influencing your strategy at this point?
Well, I think it is. First of all, I think this is not a Trump 2.0. This should have been a policy from Trump 1.0 in terms of the transatlantic relationship having cracked under that environment. And what we're also seeing is, on top of what you're mentioning, is also the shift to the right across a number of countries with more populist parties coming through. And in our view, Brussels will have to shift more to the right to gradually align themselves a little bit more with what's happening at the member states, rather than creating a schism between the European Union. And as a result, we believe that this is true, this is real. It also goes back to a very important interview which Macron had in November of 2019 with The Economist, where he called NATO brain dead. So this is a combination of various factors, with the latest one being Merz calling about the sort of the Independence Day for Europe, and the focus is real.
So there's a number of different kind of strands that are worth teasing out here. Let's talk about the shift right. Does the shift right in Brussels indicate a more growth-orientated agenda coming from Brussels?
I think it's 2 points. Number one, I do believe that it is going to be more of an economic growth agenda, which will be focusing a little bit more on the flexibility around the fiscal rules, but also reducing the regulatory components, reducing bureaucracy. It's not just about defence. It can also be about technology. So that's pro-growth. And on the other hand, however, I believe that Europe, and Germany in particular, needs to have the discussion in terms of immigration, in terms of inflation, in terms of inequality, and deal with the issues which represent that sort of 21% of the German population.
Thanos, we're sitting here looking at some headlines around what's going on in the Turkish market, and I don't know how much you follow the specifics of this. I remember back years ago we used to talk about FX in various geographies, and emerging market FX and others were all in focus for you. I mean, this isn't the first time that we've seen President Erdogan try to take on his rivals, maybe emboldened by other geopolitical activity. I mean, what's your first take when you look at this kind of thing?
My first take is that Erdogan, in my view, would not take an unorthodox political and an economic view. So this is clearly an unorthodox political move, but I do believe that he will maintain the economic orthodoxy as we've seen over the last year, and maintain that sort of the fight in terms of inflation, and with the central bank on top of those interest rate expectations. So this is politically sort of unorthodox, but I do believe that we're going to maintain the orthodoxy.
Spook the market too much?
So I think they may spook the markets a little bit, but once the markets realises that at the end of the day the economic orthodoxy remains, there may be sort of some tampering on that.
OK, Thanos, thank you very much. Thank you for joining us. Thanos Papasavis, founder and CIO of ABP Invest. Coming up, we will return to the subject of what we've seen in Germany this week. We discuss Germany's historic spending reforms with Apollo's sustainability and infrastructure head. There was a lot of money for infrastructure, a lot of money for defence in Germany. Where does that leave any sustainability agenda? Do those things unite under infrastructure? We'll talk about the prospects for infrastructure spend. That's coming up next. This is Bloomberg. Welcome to the programme, everybody. Welcome back. 7:30 here in London, Wednesday, the 19th of March. So 30 minutes until we get to the start of equity trading. And futures don't look as if we're going to be seeing much at the start of trade. Well, DAX futures could be down, actually, quite substantially, 0.5%. But we are in a bit of a holding pattern waiting for news out of the Fed. It does look as if that futures picture has deteriorated a little bit compared to just half an hour ago. US futures, incidentally, pointing a touch higher this morning. There's a lot in the mix. We're thinking about what we're going to hear from the Fed later on today, what we we heard from Germany yesterday, and weaving in some geopolitics out of Turkey, weaving in some corporate news out of the likes of Nvidia. What does all this mean for the bond market? Certainly, we didn't see too much volatility on the back of the German vote yesterday, but as described, that was broadly as expected in the end. The German 10-year yield, 2.78% right now. Shall we focus for a moment, though, Guy, on what is happening in Turkey? Because there we have seen substantial movement at the start of trade, and stocks had to be suspended for a while.
So they drop. We're waiting for them to reopen. We have seen a substantial drop, though, at the open for Turkish stocks. They have been suspended as a result of that. Because of the volatility.
Yeah, I think
Are they
just
back
reopened.
open?
Yes.
Just reopening? Okay.
This minute.
So there you go, a 5% drop. That is the knee-jerk reaction in terms of, I suspect, what is a largely domestic reaction to the news that we are getting, that Ekrem Imamoglu has been detained, potentially barring him from political office. They're talking about taking away his degree, which is a prerequisite for becoming president. He was on the cusp of declaring himself a presidential candidate, so we've been watching this one very carefully. It was interesting just listening to Thanos talking about the idea that actually Erdogan probably isn't going to go sort of off the rails economically if he's going down this route when it comes to the politics. It's going to be interesting to see how that one is taken and whether or not there is some sort of degree of stabilisation.
Yes, because he's raised eyebrows in the past when it comes to politics and how he's treated his political challengers. He's also raised eyebrows in the past around his unorthodox economic policy. More recently, it's looked more orthodox, and Thanos' view was that it will remain that way. So we'll see how that develops and the links between the politics and the economics. It has been a big week for politics in Europe broadly, specifically in Germany, though. German lawmakers have passed a landmark spending package that will unlock hundreds of billions of euros in debt financing for defence and infrastructure, heralding the end of decades of budget austerity. Joining us now with her perspective from Berlin, Olivia Wassenaar, who is Apollo's head of sustainability and infrastructure. Olivia, really nice to have you on the programme, and I know you're attending an event there that is all about opportunities in infrastructure, which seems to be very well timed. How do you look at the outlook then for private capital in Germany, given this big unleashing of defence spending and infrastructure spending?
Absolutely. Well, good morning. Thank you for having me. First and foremost, yesterday was a big day for Germany. It was a big day for infrastructure spending, and it was really a big day for Europe more broadly. I think as we look at private capital opportunities, we're hoping that the announcements yesterday really have a multiplier effect in terms of private capital investment, particularly in infrastructure.
And what does this broadly do to your Europe versus the rest of the world allocation, Olivia, when you're looking for opportunities?
About 25% of our AUM today at Apollo comes out of Europe. We think Europe is really on the cusp of something profound in terms of, really the investment attraction. It's an area where we're spending a lot of time. As I look at our pipeline and the infrastructure side, we have several large deals we're looking at in the European market today. So announcements like yesterday are truly exciting for what we see as the investment opportunity.
Olivia, good morning. It's Guy. A few weeks ago, during the German campaign for the election, this wasn't on the table. This was not being talked about. In fact, Merz was going in the opposite direction. This has happened unbelievably quickly. How quickly can you catch up? How quickly do you think the investment community can catch up? Were you surprised that this has changed so fast?
I don't know that we were surprised per se, but certainly excited to see this. It's a market we've been looking at, we've been studying, we're certainly having lots of good discussions around. And I think what happened yesterday is a great signal of investability. There are a ton of opportunities in Germany around power, around broader infrastructure, around transport. These are all areas that are really attractive from a private capital perspective for Apollo.
In terms of the wider European story, Germany has fiscal space to do this kind of thing. It has the ability to ramp up debt spending to be able to boost its economy. France doesn't, Italy doesn't, Spain doesn't. Are we confusing Germany's fiscal space with Europe's lack of fiscal space?
I think that we will see some knockout effects of it. I think especially from a private capital perspective, it really just gives sort of broader enthusiasm for folks like Apollo in terms of investing in the European landscape, particularly around things like infrastructure.
we're looking at a very volatile environment at this point, Olivia, and I wonder, I mean, infrastructure has the advantage of being a longer-term investment, perhaps, and so maybe you feel that some of that volatility is for others and doesn't mess with what you're doing too much. But on the other hand, we perhaps are seeing some big rethinking of policy direction in the White House, in other parts of global politics. How is that influencing your infrastructure allocation at this point?
Well, you're spot on. I mean, infrastructure is a long-term asset class, underpinned by contracted cash flows. These are hard assets. So we think these are assets that are very good from an inflation protection perspective. These are really assets that truly withstand cycles. That said, there's some themes we're particularly focused on. Power has been a big theme. The energy transition has been a big theme for us. Digital infrastructure has been a big theme for us. And I will say we're seeing some increasing opportunities really around transport within the infrastructure space.
And energy transition, I mean, this is something that a lot of people are asking. Does this theme withstand another Trump presidency? I mean, clearly he has his own views on climate change, but then that might or might not show up in where private businesses choose to spend their money in the United States. So what are you thinking about the way that policy and policy influences the green agenda in the United States?
The U.S. has a voracious need for power. As we talk about some of these themes around digital infrastructure, the power equation is such a tremendous part of that. And as we look at where we can really quickly and effectively build power, the energy transition, solar, wind are still a really big part of that. Batteries, for example. There are parts of the U.S. that are about to be in a power deficit really for the first time in decades. And so as we look at the opportunity unfolding, we continue to see solar in particular as a big way to really meet that increased power demand.
Is there not a case to be made, though, that the Trump administration doesn't see the world that way and sees the world via gas and oil and hydrocarbons, and that maybe is the next 4 years, story for the next 4 years in the United States? Is there a kind of compare and contrast between Europe and the United States, therefore, that becomes even greater? Europe continues down the sustainability story. There is huge infrastructure spending coming out of Germany. The Greens have made clear that much of that, some of that, needs to go down the sustainability story. Is there going to be a divergence on that sustainability story between the US and Europe?
I think on power, it's really an all of the above. When I talk to data center providers and you ask what they're permitting for, it's truly that. They're permitting for gas, they're permitting for solar and storage, they're permitting for nuclear. This is all a big part of how they're looking to really meet that power equation. So I continue to think that you're going to see a need for whatever power can come quickly and efficiently. The other thing we're really looking at is around grid resilience, right? Batteries are increasingly a theme as we have more intermittent power. But I do think it's a really all of the above. You're going to see really an energy addition over the next decade. It's going to be a lot of renewable power, but it'll also likely be gas as well.
Olivia, you are at an infrastructure conference, a conference that I think a lot of people are going to be attending, and there's going to be some really interesting conversations happening around the coffee bar. What are people talking about? What's got people excited at this conference? And is it different? Are they talking about the German infrastructure plan? Is that the first thing that people are mentioning? Is it still the AI narrative? Are people focusing there? You've just been talking about energy. What's the kind of the first thing you talk about with some of these other people, some of these other folk, when you're getting your morning espresso?
You hit the nail on the head. I mean, the German bill was really the big topic yesterday, and really what that meant for private capital and how we could all really invest behind that. So that certainly was very topical. Digital AI continue to be, real topics of discussion here as well. Everyone is investing in that sector. You really have seen a shift at this conference over the last few years in terms of where people are focused, and the digital opportunity is certainly a big one. And listen, we still hear a lot about energy transition. That's a big area where people are spending time, where people are devoting capital. And part of that is cost, and part of that is speed to market as well.
Olivia, we're going to leave it there. The morning espresso at Bloomberg's quite good. So thank you for stopping by to taste ours as well. We really appreciate it. Thank you very much indeed. Olivia Wassenaar Apollo Sustainability and Infrastructure Head, joining us in Berlin. We are seeing the Turkish lira getting hammered. It started in Stoxx. They've reopened. They are down. There was this idea that maybe the lira was more controllable from a political point of view. Doesn't seem to be the case at the moment. Down 5%.
Yes, and losses hit 10%. It fell past 40 per dollar. So there's a lot of volatility in there. Stocks down by 4.3%, having previously been as weak as down 7%. So a lot of domestic investors, as our story points out, the stock market certainly very domestic focused in terms of the people who are investing in it, focused on the domestic political risks as President Erdogan looks to neutralise political threats within Turkey. We're also seeing this having perhaps knock-on impacts elsewhere. The dollar is considerably stronger this morning, up 0.3% on the dollar index. The euro is down by 0.6%. So there's a lot of repositioning in FX.
So as I was thinking, you're right. It's now 11, nearly 12% down. And it's rippling through into the euro, which I think is interesting to your point. Anyway, we're going to take a bigger look at what is happening with this next. We're now at 41.06 on the Turkish lira. We need to talk about that. We need to talk about your stocks to watch as well. Haleon is in focus this morning. Pfizer plans to sell its remaining stake. We'll talk about that in a few minutes' time. We are 18 minutes away from the market open. This is Bloomberg.
Welcome back, everybody. Wednesday, the 19th of March. This is the opening trade. European equity markets deteriorating a little bit since the start of the hour. A lot of geopolitics in Turkey seems to be in focus right now, but we have expectations of some weakness at the start of trade. We also see US futures being weighed down right now. So E-minis down by 0.2%. Joining us now is our Markets Live executive editor, Mark Cudmore. Mark, it is Fed Day. Normally we say, we're in a holding pattern waiting for the Fed rate decision. And the Fed rate decision, we're not expecting a change in policy, are we? But there could be a lot of emphasis on whether we get anything slightly dovish or slightly hawkish from the Fed versus current market expectations.
Yeah, it's an interesting Fed decision. Good morning, Anna, because it's going to have a big impact on short-term trading, but not really change the medium-term picture at all. So I think a couple of weeks from now, we'll not care about this Fed meeting because there's still too much uncertainty about ultimately what policies get sustained or delivered and sustained on trade and how they then feed through to the economy. So what the Fed does in a few months from now will not be clarified tonight. And that's why I don't think this changes any of the macro picture. But in the short term, it really makes a big difference because everyone's very uncertain how much the Fed will react in the short term to what we've seen so far from the new administration, what the indications are we're going to get. And therefore, there's massive short-term trading opportunities, but not long-term macro story here to consider.
Mark, if the Fed is uncertain, can I assume that the BOJ is uncertain and the ECB is uncertain and the Bank of England's uncertain? If the Fed is basically sitting on its hands, do other central banks have to do the same thing?
Yes, the Fed is a leader, but I think there's much more idiosyncratic stories in other examples you've mentioned there, particularly the ECB has a very different story in its own fiscal spend. And I think importantly, what's happening in the world at the moment is a little bit of deglobalization, so a little bit more independence in those themes. I also think the BOJ is an idiosyncratic story in terms of that we've seen a BOJ that sounded a little bit more hawkish than people expected today, and potentially just a general risk aversion is helping the yen as well. But that's partially because Ueda couldn't say anything about the domestic politics situation, and I think that will maybe restrain the BOJ. So I think that the gains we're seeing on the yen out of the BOJ right now are possibly quite short-lived because ultimately the BOJ may struggle to hike amid the domestic political turmoil that is happening. Ishiba is a main supporter of him hiking more aggressively. And so if he is undermined, that certainly changes the picture there. So yes, Fed is a leader. It sets the tone, but that kind of leadership role is being slightly undermined at the margin.
OK, so there's deglobalisation, perhaps, of policy making, but even so, the BOJ a little limited in where it can move to. That sort of economic nationalism or a bigger role for domestic factors takes me to US exceptionalism, Mark, and whether that's still a reassessment of that exceptionalism in stocks and the dollar is really the thing that is still dominating market conversation.
That is very much so. But I mean, I think the story has been concluded. US exceptionalism is over. We now seen that, you know, US share of global market cap is around 47.5% from close to 51% at the start of February. It's been an incredible decline. So US stocks have massively underperformed, and that is going to be a long-term theme that will sustain.
Mark, let's talk EMFX. The Lira, the Turkish lira, is being hammered right now. It's blowing through into euro dollar. Euro dollar has taken a big hit on the back of this. We're now trading 108.86. We were having a conversation earlier about whether or not Erdogan can be both controversial when it comes to the politics and also the economics. And the view was around the table, certainly from Panos Pavasavas, was that maybe you could have one but not the other. What is your take on what we're watching unfold here?
Yeah, look, this is obviously the domestic political situation is really worrying people. The kind of, as you say there's already been some economic worries over the last few years, given the pressure on the central bank. That's actually been reversed to some extent, but now you're seeing an undermining of the rule of law in Turkey. What's happening here is that, you know, Turkish lira was massively out of kind of the global system for the last number of years. So the spillover impact is way less than it would have been, say, pre-2016 and in the prior decade when Turkish lira is one of the most liquid EM currencies in the world. But still, this is going to be a large hit to risk aversion. And in an environment where many investors have been suffering from the consensus trades getting blown up, they're now wondering, hey, what other EM trades do I have that are vulnerable? They're going to look to the other EM currencies out there. I think also the reason we're seeing this risk aversion particularly concentrated in Europe at the moment is that while the hedge fund base are not as exposed to Turkey as they used to, and there'll just be a few small EM funds that have large exposure, the fact is the banking system is still exposed here. And that's why you're going to see European banks suffer in the back of this. You're going to see the euro suffer a little bit in the back of this. People are going to get worried about the spillover. So I think this is going to be a story that's going to dominate the sessions ahead.
OK, so that's why this reads across then perhaps into euro. Just to point out to the audience, we've got live pictures coming to us from Istanbul's City Hall after Turkish police arrested then Istanbul's mayor. In terms of the Turkish assets that we focus on, Mark, you've said that the Turkish lira is, you know, we've seen a decent size response, but maybe not as big as we've seen in other episodes of political volatility in Turkey. So I suppose our attention goes to Turkish stocks. There we see some weakness. What will be, or is it going to be Turkish bond markets that are going to be the best asset to look at to get a full sense of the risk aversion here?
I think all Turkish assets are kind of the same in terms that the international exposure is way declined from what it used to be. And therefore, there's not one that you used to look at the Turkish lira as the main guide. All of them are showing, look, there's massive pain in Turkey. All of them showing there's some pain. For how much of a spillover it is into the system, I think it'll be interesting to look at some of the European banks. And then I think what will be interesting is to consider some of the other EM currencies that are a little bit in focus at the moment. So, you know, on either side of the globe, you look at Indonesia's been under a lot of pressure in recent weeks. Bank of Indonesia just had its rate decision out, but the Indonesian rupiah and the Indonesian stock market have been some of the worst performing in Asia this year. People have been worried about the sustainability of that situation. And then if you go to the other side of the globe, you also have a Bank of Brazil central bank decision today, and that's in context that people have been very worried until recently about Brazil's fiscal sustainability. Now they've turned much more positive recently, but will that nascent optimism around Brazil take a large hit today? I can see that getting a bit of a retrenchment, at least in the short term.
Mark, great stuff. We'll look forward to the updates throughout the day. MLIV Go is the function you're going to need to follow as we work our way through this story. It's interesting as well that Turkey has recently been talked of as well as part of the rearmament story in Europe. Huge capacity in terms of the industrial base. And I'm just wondering if this throws a little bit of a wrench in that story as well, that maybe Turkey was going to become back more into the European defence orbit, and whether or not this pushes it maybe further back out onto the periphery.
Yes, we talked to Tim Ash, didn't we, from Blue Bay, who was somebody who was suggesting that Turkey could have a role to play here. Turkey is a NATO member, of course, and as people are looking for solutions in Ukraine, and what does peace in Ukraine look like? What could security in Ukraine look like? Would there be a further role for Turkey in that as well, with but maybe not with a NATO umbrella, if that's what the Russians are saying is their red line? So a lot we don't know there, but we'll certainly continue to watch how Turkish assets are responding quite quite a lot to this news development.
OK, let's 6 minutes to go until the market open. Let's blast through some equities with Joe and figure out what we need to be watching.
Guys, we've got a big share sale for Haleon today, the London-listed consumer health company. This coming from Pfizer as the US company exits its stake after that spin-off a couple of years ago. Now, the discount on it is actually not that big. It's actually sold at quite a good price, and analysts reckon this is because sales at the company doing really well at the moment. But keep an eye on that one. Then, in terms of the other pharma stock in focus, GlaxoSmithKline could be a little bit weaker. This after reports from the Wall Street Journal that the US is potentially going to be scaling back funding for HIV drugs. Now, Glaxo had around £7 billion of HIV drugs last year. That is a risk for them. Then in terms of the Turkey exposure, the one I've got my eye on is BBVA. Around 13% of their sales do come from Turkey via the investment in Garanti Bank. So that's a risk for the Spanish-listed lender today. Then, in terms of your analyst ratings, a couple of positive ones to bring you. We do have Schneider Electric up to outperform at RBC. Ferrovial in Spain is a buy at Deutsche Bank, and one that's going to be weaker probably is Compass Group, double downgraded at Exane. Keep an eye on that one in London today.
Joe, thank you very much. Our equities reporter Joe Easton with us with a rundown of some of the stocks in focus. We'll continue to watch how the Turkish story then ripples into Europe through the euro, through the banking sector. We'll bring you that next. The Open is coming up. This is Bloomberg.
Wednesday the 19th, good morning folks. Let's talk about Tuesday the 18th. Europe displaying some decent amplitude yesterday, a few decent swings coming through. US markets, they just dropped. This is the S&P, dropping hard at the get-go. And then you want to know what a trading range looks like? A tight trading range, that's what that looks like. Waiting for the Fed, waiting to get some clear signals. But it was tech stocks that took the early hit. So how does that work in terms of translating into European assets this morning? We need to fold Turkey into this narrative as well and think about what the implications are there. You've seen the impact already on euro-dollar this morning. So let's talk about the futures, show you some numbers, give you an idea of where potentially we're going at the get-go this morning. We need to continue to price in a little bit of the American story yesterday. We need to also price in a little bit of weakness, maybe coming out of the Turkey story as well. So that maybe is why we've seen a little bit of a dip lower in terms of European futures this morning. We're down by 0.6%. FTSE futures are holding up the most, but DAX futures, now the DAX has delivered the kind of the most recently. So unsurprisingly, it is seeing the biggest downside this morning. So we're down by 0.7%, Anna, on the future story.
Yeah, absolutely. So we'll continue to watch how that broader futures picture translates into weakness at the start of trade. One of the things in focus could be the banking sector. We pulled out BBVA here because it owns 80% of Garanti Bank over in Turkey. We could also have the Dutch lender ING, has a wholly owned Turkish subsidiary. BNP Paribas owns part of Turk Economy Bankası. So we certainly have a lot to focus on when it comes to the European banking sector and its exposure to Turkey as the Turkish lira drops as much as 10% earlier on in the trading session and Turkish stocks drop. Haleon in focus after Pfizer says it's wrapping up its Haleon exit with a $3.3 billion stake sale. And we'll also keep an eye on GSK on reports in the United States, Guy, about cutbacks in US government spending on HIV drugs.
We'll see how that all feeds through into the healthcare sector. Right, let's talk about some wider markets. Let's show you what is happening. The market open is upon us. Time for the opening trade. Here are some numbers. Let's give you an idea of what is going on. The FTSE 100 probably is the most becalmed market potentially this morning out of the European indexes. We'll see what the Stoxx 600 delivers in just a moment. But I'm fascinated to see how big a downside we do see in German assets today. Quite a strong connection, you could also argue, between what happens in Germany and what happens in Turkey. So maybe some effect there as well that we need to think about. The IBEX already in terms of the banking sector, reflecting maybe what that Turkish story is going to do to assets this morning. It is down by 0.6%. The CAC 40, not a significant loss. Actually, I was talking about the FTSE 100 maybe getting away with it the most, but it looks like actually the most becalmed market at the moment looks like the CAC 40 in Paris, only down by 0.2%. The FTSE, 0.1%. The FTSE is down by 0.2%. We will wait and see, Anna, what happens with the DAX in a few minutes' time.
Yeah, absolutely. So the DAX not yet open, as you point out, but interesting to note where the banking sector is at this point. So the banking sector is weaker, down by 0.6%. Also worth noting, it was the best performing sector in Europe yesterday. So that's sort of setting it up to retrace a little bit this morning. And if I look at the names that are on the list of banks that are under pressure today, not all of them are open, in fact, across Europe, but BBVA is open, and that is down by 2.6%. So we certainly have an opening price there, and we'll wait to see whether we get any further movement in some of the others. ING, BNP Paribas also in focus because of that exposure to Turkey, where, just as a reminder, the president we've seen the arrest of one of his political rivals, the mayor of Istanbul, and so we're certainly watching to see what that does to risk appetite. It has certainly been showing up in weakness in the currency, and that's spread into weakness in stocks, which then is translating into weakness in the euro and weakness in the European banking sector.
So BVA is down. The healthcare sector, as has been pointed out, also under significant pressure this morning. In terms of the points losses, that's probably where the bulk of some of the losses are coming from this morning. So GSK is down, Roche is down. You've got others in Europe as also trading lower. But GSK obviously responding maybe to some of the news out of the United States, as you highlighted earlier. Roche maybe in a similar basket. So it's kind of banks and healthcare is where the weakness appears to be coming through this morning. It's interesting that HSBC, other European banks are also tracking a little bit lower as well. On the upside, some of the defence names and some of the AI trades continue to do well. Points gains being added by Schneider, Shell, Rheinmetall, BAE Systems. So the defence story is once again, the defence story may be an expectation that the conflict continues in Ukraine. Should we point ourselves in that direction?
Yeah, interesting that actually the worst performing sector now is basic resources, and there's been so much happening on the geopolitical front that perhaps we've not reflected maybe on the global growth story sufficiently today. I know that we saw quite a mixed session through the Asia session, didn't we, with actually MSCI Asia Pacific pretty flat, and there had been some outperformance in some Japanese assets, but Chinese assets more under pressure, and sometimes we take our growth signals from the latest conversations in China, but basic resources are the worst performing sector at this point.
So it's interesting, defence stocks, Dassault, BAE, Leonardo, Rheinmetall, all hitting fresh 52-week highs this morning. So maybe we can kind of point ourselves in the direction of the geopolitics. The banking sector is actually full of 52-week highs, despite actually we're seeing BBVA and some of the Spanish banks lower. So ABN AMRO, Agricole, Pasky, BNP Paribas, all tracking higher this morning. So it's an interesting divergence maybe within that story.
OK, let's have a quick look on some Turkish assets then and get ready to bring in our next guest to our conversation. So we've been talking about the weakness in the Turkish currency, the weakness in Turkish stocks, the banking sector under pressure over in Turkey. That has had read across into the euro, of course, as well. The euro down by 0.4%. So we'll bring that up to you, those Turkish assets, in just a moment. Bettina Mazzocchi joins us, EMEA Wealth Solutions co-head at BlackRock. Bettina, thank you very much for joining us. It seems we are seeing some interesting developments within Turkey. This is having an interesting read across from a risk sentiment, risk appetite perspective into other European assets. We see weakness across European stocks now. Is this something that, from an EMEA Wealth Solutions perspective, you're going to focus on, the developments in Turkey? Is this new information that helps you reassess where we are on the banking story, for example, or is this not going to be front and centre for you?
Thank you for having me. The geopolitical risk, generally speaking, is one of the mega forces that are really reshaping the way our economy works and therefore how we think about markets. What is really dominating, though, in Europe is more what is happening in Germany and what is happening in Europe, generally speaking. What we've seen yesterday was German infrastructure and defense spending being voted is a major fiscal policy shift and a momentous change for Europe with the potential to really inflect the trajectory for the whole of the region. Now, we shouldn't lose sight of the fact that stimulus when it comes to defense and infrastructure takes time to lift growth, that execution is key, and also that the fiscal space across countries in Europe is unevenly distributed. Germany is a very different place than is France or Italy, for example. So this has different implications from a portfolio perspective.
Yes, and we're reminded by a number of voices. I was quoting a business lobby. We spoke to somebody who used to work for one of the ratings agencies recently. The execution is really important here, an ability to spend the money on the things that matter, clearly on the defence side, and then on the infrastructure side, and what that does to growth will be crucial. What kind of execution are you looking for? Where would you expect the money to be best spent, I suppose?
Yeah, how does that translate into effectively corporates that we could invest into? There is no doubt that Europe has staged a comeback since the beginning of the year. It has been European stocks have been unloved by global investors for a very long time, but this has changed very much at the beginning of 2025, and we don't think the rally is over. What is So the first leg of the rally really was lifted by sentiment. The second rally seems to be more anchored in improving fundamental. But crucially, to your question, let's remember that most of the corporates that are in European indices derive about 30% of their revenues from the US, while only 6% from German infrastructure. So even looking at what's ahead for Europe, the US outlook, the US economic outlook is pretty much crucial for European corporates.
Good morning, Bettina. It's Guy. It is Wednesday, the 19th of March. We're into this year, but we're not that far into this year. The German stock market is up by 17%. You talk about the legs of this rally. Do you think this first leg, this leg year to date, has gone too far too fast, given what you've just said?
No, we continue to be very positive on European stock. We have recently rotated some of our US market cap weighted exposure into Europe to position our portfolio to benefit from the second leg of the rally. And really our conviction is anchored on three big drivers. The first one, as you mentioned, is momentum and the fact that investors are looking to diversify outside of US stocks. And this used to be, or this started with that being mainly a non-US idea from investor, but we've seen in the flows in ETFs in March year to date is that close to 40%, I think it's 37% of the flows we've seen in European equities actually come from the US. So there is a broader momentum in favor of the US. This is the first one. The second driver is the improving micro and macro fundamentals. Macro, we talked about it, was the German tailwinds. We could also mention improving corporates revision, and the third one, which has taken a bit of a pause yesterday, but is improving the perspective of improving reduction in geopolitical risks, whether it's the German elections that are behind us, but really a perspective of an improvement in Russia and Ukraine.
Is this a permanent divergence from the US markets? US markets are underperforming year to date. German markets are outperforming year to date. Does that spread continue to widen?
It depends on why they widen. If it's idiosyncratic situations, such as, for example, the uncertainty for the policy, in the US policy that we see, then the divergence should continue. If it's more general concern about the growth, then we should see similar reaction across both sides of the Atlantic. But specifically, the reason why the US market have had a tough time since the beginning of the year is linked to the uncertainty around the policies, and specifically the fact. So it's not so much the tariffs or the decision that the U.S. administration has taken, but more the sentiment of uncertainty that in itself is likely to delay investment or consumption decision, which in turn are an immediate risk to U.S. growth. So, we don't think the U.S. is... Go ahead.
I was going to ask you, yes, I mean, that makes me wonder whether April 2nd will represent a change in thinking in the markets, given we will have at least an element of certainty in the short term. Whether that will be sustained, we'll see. But actually, what I wanted to ask you about, Bettina, is the Fed and whether you think we'll get any kind of dovish or hawkish messaging at the margin from the Fed today.
So this is interesting because it's a central bank heavy week, but it's also one where we don't expect much to happen, really. So we expect the Fed very much to be on hold. So what the market is going to look at is much more the narrative around the statements that the Fed and the other central bank are going to put out. And we expect these narratives to acknowledge some slowing growth by not inflecting fundamentally the direction that the Fed is heading towards to. What we really believe is that the Fed will be waiting for greater clarity coming from the U.S. administration in terms of the measure they want to implement in order to inflect durably their path.
Bettina, we're going to leave you there. Thank you very much indeed. Bettina Mazzocchi joining us from BlackRock. Let's look at how the markets are performing right now, give you an idea of what the centre of gravity looks like. The core 6 looks like this, as you can see. A mixed picture. It's interesting. The pharma sector is definitely under pressure this morning. Luxury is down a little bit as well. Mixed performance when it comes to the car sector. Tech is also taking a hit. Obviously, Nvidia was the story yesterday. Schneider's up, Nestlé's down. I can't discern anything in terms of the trend that board tells me at the moment. Maybe Joe's got some more useful things to say. What are you seeing in the banking sector?
So the banking sector is interesting, Guy. Because of this Turkey read across, we are seeing BBVA, one of the worst performers in the European market this morning. We're down around 2% at the moment. It was down around 3%. We are actually also seeing some weakness in a couple of the other stocks exposed to Turkey. ING with a little bit of exposure, and also Airport de Paris and one of the construction firms, VCAT, over in France as well. But BBVA really taking the brunt of the declines, given that big exposure via Garanti Bank. They are the majority holder of that lender, so that's accounting for the weakness over there. Then in terms of the pharma stocks, GSK was a little bit weaker over in the pharma space in the London market. This, of course, coming from this news from the Wall Street Journal that potentially the US scaling back support for HIV drug funding. That did hit Gilead in the US yesterday and feeding through into Glaxo in London today. We're down 2% on GlaxoSmithKline this morning. Then in terms of the truck maker Traton, looked a little bit weak as well, and it's the second big drop for this company over the past couple of weeks. We saw some concerns again around some changes in US regulation hitting the firm, but today it's the earnings and the orders do look a little bit soft for the German truck maker. Then in terms of your analyst ratings, Compass, that's the worst performer on the FTSE 100 today. Exane BNP downgrading, saying that they are seeing weakness in staff retention numbers in the US, and that's going to feed through into the catering sector. And this has been one of the best performing London-listed stocks over the past couple of years, a massive blue-chip firm, but we're down 5.6%, a big move and a big points weight on the FTSE 100 today. And then finally, just checking back in on Schneider Electric, as Guy mentioned a moment ago, that stock is higher. A double upgrade, another upgrade for Schneider, given the sell-off we saw related to the data centre worries. RBC today reckons that that has gone too far, so they're adding to the bullish calls on Schneider Electric, and that one moving 0.8% higher in Paris this morning.
OK, Joe, thank you very much from our equities team with a rundown of stocks that are moving. Something that definitely moved stateside in yesterday's session, and we'll keep an eye on it again today. Pre-market in the US, now open, of course, is Nvidia. Has Jensen Huang lost the Midas touch? Nvidia's shares certainly lower yesterday, pretty flat this morning. A lot of new product announcements. We heard more about new Blackwell. We heard more about Rubin. But has it moved the dial at all? We'll get details next. This is Bloomberg.
Welcome back. Wednesday session. Banks are under a little bit of pressure in terms of the European story this morning. It's a mixed picture. Some are up, some are down. One of the stocks that is certainly down is UBS. That stock trading down currently by 1.25%. The Morgan Stanley Banking Conference is taking place in London as we speak. And as we speak, Sergio Ermotti, the CEO of UBS, is speaking. We're starting to get some headlines crossing from what he is saying. I don't think any of it's particularly revolutionary. Not sure the capital question will be cleared by May. Our 2025 share buyback plans are credible. Interesting, he's saying the macro consensus at the end of 2024 was wrong. I think we've all learned to appreciate that it was fairly wrong. But he is confident that UBS can meet its cost and return on tangible equity targets and may implement further headcount reductions from the end of 2025, which is a theme that this morning is running through the entire banking sector.
Yeah, absolutely. Jobs certainly in focus. So let's go to that conversation in the wider banking sector now. Bloomberg has learned that Morgan Stanley is planning to cut around 2,000 employees later this month in the first major workforce reduction under the CEO, Ted Pick. Let's bring in Bloomberg's Charlie Wells, who can tell us more about this story and other news flow surrounding the banking sector. So let's start with the Morgan Stanley then. Good morning to you, Charlie. Let's start with Morgan Stanley. 2,000 cuts. Where and why is this happening?
So these cuts are happening across the bank, and they come at a really uncomfortable time for the U.S. banking sector because if you flash back to that November election, there was so much exuberance, so much hope that this would unleash a wave of deregulation, a wave of mergers and acquisitions. Of course, it's still early days, and people familiar with the matter have said that these cuts across the bank, don't have to do with recent market turmoil, but they have to do with this issue of attrition, of staff just not leaving, and of Morgan Stanley needing to keep control on costs. So these are significant, right? It's 2,000 cuts. They've got about 80,000 people, so those will be felt across the board. And they come at a really uncomfortable time when that story about banking is turning darker.
Let's talk about what is happening over at Citi. Jay Fraser's revolution at Citi continues, but it comes in waves, and there's a series of bonuses that have been kind of tied to it and the changes that are being made. And we've had Phase 1, we've had Phase 2, both of which have kind of gone through. Phase 3 is looking a little bit more tricky.
Not good. I mean, look, these are bonuses that were tied to progress on risk and regulation. And I think if we were just talking about job cuts, I think this gets to the idea of careful who you cut. Right, because Citigroup's back office has been under a lot of pressure. Yeah. Some of the regulatory groups have been fined, I think in July it was over $130 million. And so you've got to keep that, that data control. You've got to keep those risk operations moving, even as you're trying to reform a bank. But it's not looking good in this third tranche of bonuses that were tied to that performance there. It was about 70% of target. In prior years, it was 80 and then 95. And then something that was really sticky here is this third tranche of bonuses. There was an element tied to share performance. And without that, this would have been, 53% tied to performance. So not great, guys.
OK, not great there. I'm looking at how European banks have done since the start of this year. And actually, that's the best performing sector in Europe this year. But the European story and the US story are not the same thing, and perhaps increasingly or decreasingly so. So how are banks faring this year then, Charlie? Talk us through the volatility in markets, how that's playing out for them.
I think this is a really pivotal time, especially ahead of earnings season. And we've been talking in general strokes about the end of U.S. exceptionalism. I think as we start to get into that earnings story, we might start hearing the end of U.S. exceptionalism in insert industry, and we might start hearing about the end of U.S. exceptionalism in banking. And you're just seeing that in that divergent performance. I was just looking at that KBW index, that big index of U.S. bank stocks. It's down just to where it was just before the election. And so that really kind of, is evidence of that huge boost that we saw, that huge wave of optimism coming back down to earth.
Great to see you, Charlie. Thank you very much indeed. Charlie Wells joining us on what is happening with the banking sector. Let's turn our attention to US pre-market. Some of these banks may be moving there, but there are other stocks that maybe we want to focus our attention on, and one of those certainly is Nvidia. The stock is not doing much this morning. It's up a tiny little bit, as you can see, but after getting hit quite hard yesterday, we're not getting the bounce back that some may have anticipated this morning. So Nvidia's CEO, Jensen Huang, unveiling more powerful chips. He's developed a platform. He's got a platform that is going to develop humanoid robots. We're talking about GM, Walt Disney. There's all kinds of relationships that are being enhanced. What wasn't enhanced yesterday was the share price. But take a listen to the spread of what this company wants to achieve.
Time for autonomous vehicles has arrived. And we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they could revolutionize the way they manufacture, AI for enterprise, so they could revolutionize the way they work, design cars and simulate cars, and then also AI for in the car.
Tom's here to talk about this. Tom McKenzie, of course. Normally, he opens his mouth and all is good. Didn't have that effect this time around. Is this just because the market is so much more skeptical right now of what is said and the achievability of what is said?
There are some things that Jensen Huang can control and some things that he can't, which is that focus on the macro, the risks around recession, and whether ultimately that leads to the hyperscalers pulling back the capex pledges, $370 billion for this year, with Bloomberg Intelligence projecting maybe that gets to something like $500 billion in the years after that. So there's the elements that he can't control, which is part of the factor, I think. But to your point, in the room, according to the people, men and women in the ground, in the room, the journalists and the analysts, there was a very different mood given everything around what's happened through the impact of DeepSeek and the concerns about recession risk. The mood has changed around the Woodstock of AI, as it's been framed, given previous speeches where stocks would move. This time, stocks moved to the downside. GM Tech took a bit of a hit. He talked about T-Mobile and Cisco. None of these stocks get a material upside from Jensen Huang this time around, and that tells you a lot. This is a CEO now trying to do multiple things. One is convince his customers, the hyperscalers, that he can produce chips, the software, the hardware and the services that are creating efficiencies, as he continues to believe there will be greater adoption. The other is trying to convince investors that this is a company that is future-proofing its business trajectory. And I like the way you emphasise spread, because they are really trying to push out. If you just look at the auto sector, they're looking at the car itself, the factory and the services and software that goes into them. Just in that particular sector. I haven't even mentioned telecoms or robotics, other elements that he tied in as well. So it's about future-proofing the business, but some of those technologies are more mature than others, which is why there are still question marks.
Yes, and he sort of nodded to that, didn't he? So just in the making of a car, there's the manufacturing, there's the enterprise that you need for the business, and there's the in-car stuff, and these are all really different uses of AI, perhaps. But in terms of the hyperscalers, Tom, just take us through that then, because I was looking at the Bloomberg Intelligence numbers. They are estimating that actually we do see, or rather they've increased their capex expectations for hyperscalers in 2025 since we heard from DeepSeek. So it seems as if there is some resilience to the capex spending expectations, although big questions about the years after that. Is that where the focus is now?
I think that's probably an accurate way of framing it. And Jensen Huang said almost everyone in the world got it wrong when it comes to how DeepSeek changed the expectations around the demand for chips. Simply, and look, we've been speaking to DeepMind CEO about this. He said DeepSeek exaggerated some of its claims around the cost needed to train the models. Others have aligned with that view as well. Jensen Huang saying ultimately, whatever DeepSeek did, there will be greater adoption as we move towards agentic AI, so agent models within businesses and enterprises and the consumer doing different tasks. The move to artificial general intelligence, that race for superintelligence, that will continue to drive. They bought 1.3 million Hoppers last year. They bought more than 3 million of the Blackwell GPUs just this year alone.
OK, we will continue to focus on Nvidia, of course, Tom. Thank you, Tom McKenzie. Coming up, the Lira plummets after the Turkish president's main political rival is arrested. We'll get details. This is Bloomberg. Welcome back. This is the opening trade. 30 minutes into what has been a fairly eventful session, actually, for Europe so far. So it's Fed Day. We're waiting for that big event later on today. In the meantime, we get news out of Turkey. We'll come to that in just a moment. But that has had a sentiment impact on what we're seeing here in Europe. So the Stoxx 600 is down by 0.2%. The DAX is down by 0.4%. And, Guy, we've been watching to see what happens with the banking sector. BBVA is one of the businesses we look to there. That's down by 2%. But other banks with Turkish exposure not down by much. And maybe worth pointing out, US futures and the euro have regained a little bit of their poise from earlier.
So there's a ripple across from what is happening with Turkish assets into the lira. And in some ways that is logical because it further complicates the geopolitical narrative that we're watching. Turkey is definitely part of that. The role that Erdogan is going to play going forward from here could be hugely significant. So it just complicates kind of the outlook for Europe and its ability maybe to push forward in terms of the rearmament programs and so much of all the other stuff that we are talking about at the moment. So that effect is there. But as you say, we're going to move off that quite quickly and focus more on what is happening with the Fed a little bit later on. And that's a little earlier in the European day as well. So we need to bear that in mind. There's only a 4-hour gap between London and New York at the moment, or Washington, as it's probably more importantly to focus on. So that'll be really interesting to sort of see how that works. the market doesn't. I get the feeling the market really doesn't know what it's going to get from the Fed today.
Yeah, I feel like...
And that's different to the kind of the meetings we've had over the last few kind of months and years in some ways.
There could be a sort of dovish presentation of where we are right now with concerns around the economy. I mean, not too overtly stated, perhaps, but maybe a slightly dovish stance. You could also imagine there being a slightly more hawkish stance because they're mindful, even if they don't say the T word, tariffs out loud, they're mindful of what that might do to pricing in the United States. And as we were hearing from Thanos Papasavis, everyone's still scarred by the fact that inflation went so high in recent years that they'll be mindful of inflation expectations and not letting those off the leash. But it does feel as if it's, with those two arguments running around in our heads, it feels like one of those days where tomorrow we come in and we say, well, everybody got something out of that.
You could end up in that kind of scenario, couldn't you? I'm also curious to see whether or not he talks about the stock market, because there is a connection between what happens with the stock market, the wealth effects, and how that ultimately affects the consumer. And it'll be interesting to see whether he talks about that. The market has now, it seems, discounted the idea that we've got a Trump put. Do we still have a Powell put? Is that still in existence? Is he concerned about the relationship between the stock market and what happens on Main Street? So I think that's going to be really interesting as well.
I've seen so many puts mentioned in recent days. It's quite staggering. I'm going to have some sort of tally chart and tick them off every time they mentioned. I mean, the Fed put was the original, and the Powell put more, you know, sort of part of that. But then that morphed into something around the bond markets, didn't it? With the Besant put around treasuries and whether that. And then I saw someone talking about a Xi put yesterday around the extent to which we've seen pain in China, China coming back to the fore, China on the front foot, while the US on the back foot. Maybe there's some kind of China put there as well.
The market, ascribing a strike price to all of these things, I think, quite hard at the moment. We also need to talk about what is happening with Turkish assets, which have been, as Anna said just a moment ago, moving quite significantly. So the stock market is down by 5.5% at the moment, 5.6%. The lira against the dollar is down by 6%, so some significant moves there. The Turkish bond market is reacting as well in terms of the dollar bonds. We've got them up by 20 basis points at the moment. The CDS is widening out quite significantly as well. This, as we see the mayor of Turkey, who has presidential aspirations, being detained, and potentially the political fallout from this quite significant. Let's try and understand what is happening here. Why has Imamoglu been arrested? Why are we seeing this detention? What is happening right now that has required this move from Erdogan? Paul Wallace joins us now to talk us through all of this. Paul, thanks for taking the time. Why now? Why is Erdogan doing this now? Why is this happening at this point, this sort of critical time when so much else is going on around the world? Why is Erdogan deciding that this is the moment to strike?
Hi, Guy. Yes, it's a difficult question to answer as to why now. It is not a complete surprise, and in recent months, in recent weeks, there has been a widening series of investigations and lawsuits against opposition figures. Ekrem Imamoglu is the big one in a way. He's one of Turkey's most popular politicians. He's the mayor of Istanbul, a city of 15 million people. He was widely seen, or is widely seen, as Erdogan's biggest political rival. And the fact that Turkish authorities have decided to detain him is something that is really, really worrying markets. We saw the lira down about 6% on our screens earlier. It was down 10% only about 10-15 minutes ago. Huge losses across the board in the Turkish bond market, in the Turkish stock market as well. On Sunday, there was meant to be a rally with the CHP, Imamoglu's party, in Turkey. It was probably going to draw big crowds. It's unclear if that's going to be allowed to still take place. And at that rally, Imamoglu was effectively going to be announced as a presidential candidate. The vote is scheduled for 2028, but there's a widespread expectation that Erdogan will want an early vote. For constitutional reasons, he can't stand again if the vote's in 2028, but he can if it's held sometime earlier than that.
OK, put this in the longer sort of lens of history for us, and quite recent history, really, Paul. It's within the last few years, I think, that we've had clampdowns on political rivalry within Turkey. And that, for some time, went hand in hand with some fairly unconventional economic policy. Then, latterly, the latter of those pivoted to something more conventional. Looking at the extent to which the market has responded today versus how the market responded previous times around, it seems as if perhaps this is more in the realms of expectation than it was some years ago.
It was, but I think it's the kind of move that could undo a lot of, let's say, the goodwill that Turkey has built up since mid-2023. Erdogan was re-elected around that time, and he pivoted on economic and monetary policy pretty dramatically. He no longer called on the central bank to carry out ultra-loose policy, and the central bank raised rates massively from 8.5% to 50%. That was all to curb inflation, and broadly speaking, that has worked. That has led to inflation slowing. It's still around 40%, so still one of the highest rates in the world, but it's come down a lot from levels of 80% or so not that long ago, and we saw big inflows back into the Turkish bond and stock markets. I wouldn't say that Turkey had necessarily become a darling of the EM world once again, but it was something akin to that. Today's events could change that, or as I say, reverse a lot of the gains Turkey has made among EM investors in the last since mid-2023.
Great analysis. Thank you very much, Paul. Thanks for joining us. Bloomberg's Paul Wallace with the latest on what is happening in the Turkish story. Let's pivot to other matters geopolitical. Russian President Vladimir Putin has rejected Donald Trump's call for a 30-day ceasefire in Ukraine. During his call with the US president, Putin only agreed to limit attacks on energy infrastructure while demanding a stop to the flow of weapons and intelligence to Ukraine. Trump told Fox News the United States will try to be friendly with Russia as well as China to prevent closer ties between the two nations.
The first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. China needs us in terms of trade very badly.
That's the important wider context then. Let's bring in Bloomberg's Russia economy and government editor, Greg Sullivan, who's been following the details of the call and its aftermath. Greg, very nice to have you on the programme. So take us through some of the sticking points and whether we've got to the bottom of exactly what was agreed with regards to infrastructure, because in one readout there was talk of not taking down or attacking energy infrastructure, and in another readout it was energy and infrastructure, which could be interpreted differently. Take us to some of that detail.
Absolutely. I mean, the first thing that we saw really was that Putin did not offer a lot. The U.S. came to this phone call seeking Russian buy-in into this 30-day truce, and that was just simply not agreed to. Now, the two sides did announce that they had agreed to halt strikes on energy infrastructure. As you noted, there was a bit of a disagreement in the U.S. statement, which said energy and infrastructure, implying other civilian infrastructure, whereas the Russian side just said energy infrastructure. But last night, we did see drone attacks on Ukrainian infrastructure. President Zelensky saying that that included in a hospital and other civilian infrastructure sites, so it's not clear that it does pertain to anything beyond energy infrastructure. It's also interesting to note that that halt to strikes on energy does also benefit Russia. Ukraine has been striking Russian energy infrastructure with some success, aiming to harm their war economy. So it's not entirely clear that this was indeed much of a concession. But that makes sense given that Putin has been laying out very steep demands for any halt to the hostilities here, demands that will be very tough for Kyiv to swallow, and that some Western analysts see as a play for time, maximalist demands to try and get the most concessions out of here. So it appears we are still rather far from a ceasefire deal on the horizon.
Greg, Europe not involved. That's obviously a critical factor in all of this. France and Germany watching very, very carefully. Emmanuel Macron, Scholz watching very, very carefully. Let's listen to their reaction.
We are in full agreement that the goal of all efforts must be a just and lasting peace for Ukraine. The announced ceasefire for attacks on the energy infrastructure can be an important first step on the way. The first steps are being put in place, but the objective must remain the same, a ceasefire which is measurable and verifiable, fully respected, to launch full and detailed peace talks which will enable a solid and long-lasting peace.
The view from France, the view from Germany. Greg, what does Europe do next in this story?
Well, Europe is in a bit of a tough place. I mean, for one, Trump has been negotiating directly with Russia on the issue of any kind of ceasefire. And two, we mentioned those demands that President Putin has been making. One of those demands is that he does not want weapons supplies into Ukraine during the duration of a ceasefire. Europe has rejected this, saying that they want to continue arming Ukraine to make them strong for their own self-defense. There are legitimate worries that that could weaken Ukraine during any kind of ceasefire, allowing Russia to continue rearming and make Ukraine vulnerable to a resumption of hostilities down the road. So a steep demand that Europe has really rejected. Now, Europe, on the other hand, they have been seeking to engage in the process, talking about peacekeepers that could potentially serve as a security guarantee if any ceasefire comes into fruition. Russia has rejected NATO peacekeepers on their soil, but Europe does continue to try to engage in the process as they see this it very much directly affects their own security.
Greg, we're going to leave it there. Thanks very much indeed for the update. Bloomberg's Russia economy and government editor, Greg Sullivan. Let's talk about the Ukrainian reaction now. The Ukrainian President, Volodymyr Zelensky, says he'd like to speak to Donald Trump about the details of Moscow's proposal.
We will support any proposals that lead to a sustainable, just peace. But for this, we must understand what is at stake. What are the details? And I hope to God that we know all these details so that the partners talk to us, because there are two sides in this war, Russia and Ukraine. Trying to negotiate without Ukraine, in my view, will not be productive.
Remember that Zelensky has signed up to the 30-day plan that was pushed forward by Donald Trump. It is Putin at the moment that maybe is pushing back on it. Let's get some analysis, therefore, from how the Ukrainians are going to develop their strategy around all of this. Ollie Crook joins us now from Brussels on this story. Ollie, talk us through the response and what the Ukrainians are expecting to happen next.
Yeah, well, listen, Guy, what we'll get is hopefully some insight from that from a guest a little bit later in about 20 minutes' time when we speak to the deputy head of Zelensky's office to really get an idea of how much they have been briefed by the United States, how much information is actually making to them. If you go by the statements that we heard from Zelensky yesterday that you just played there, Guy, it seems that he is still very much in the dark in terms of what the conversation is happening between Vladimir Putin and Donald Trump. When you look at the White House readout of that conversation between Trump and Putin, about half of it is about the war in Ukraine, and about half of it is about basically possible cooperation with Russia in the future on economic issues, on other geopolitical flashpoints, whether it be Iran or others. And if you read the Kremlin readout, at the very end, it's basically Putin saying that Trump was endorsing the idea of a sort of American and Russian hockey game to be played. So again, these are not things that are going to be very reassuring to the Ukrainians, who are right now also hearing secondhand that basically it sounds like Donald Trump is already discussing dividing assets. I mean, we're talking about infrastructure that exists in Ukraine between Russia and Ukraine without them sort of at the table. So I think that it's, we're going to have a little bit more insight in terms of what they're actually discussing there. But again, the Ukrainians are in a very sort of difficult position because they can't be very critical of the United States also, particularly since they have no sort of other recourse, as we learned from the Oval Office the other day, and the sort of withdrawal of military and intelligence support, which was absolutely massively damaging to the Ukrainians. So they're watching a very, very sort of a tightrope, and also watching, it seems at the moment from a distance. We'll get a little bit of insight, as I just said, in about 20 minutes time when we speak to Zelensky's office and get an idea of where their sort of head is about this sort of conversation.
Yes, and we understand that delegations are heading to Saudi, and we'll see whether the Ukrainians have any part to play in that, to try and nail down some of the details between the United States and Russia, as we understand. So we'll watch to see how that conversation develops. Interesting to get the Ukrainian perspective. To that point about the wider context then, Oliver, is there a sense, and perhaps this will come out of your conversations later, a sense to which the Ukrainians are aware that their interests could be sacrificed for a broader relationship reset between Russia and the United States, something that will allow the United States to more stand up to China, perhaps, as we were hearing there from President Trump earlier?
I think it's very active in their minds. And I mean, when you sort of look at the sort of intricacies of what's going on right now in the sort of different world axes, I mean, it's sort of interesting, right? On the one hand, Trump is talking very, very tough on China, but also saying he wants to be friends with China, saying that he wants to split apart Russia and China, but still wants to be friends with both Russia and China. And we should say that some of these sort of strikes overnight that Zelensky was referring to, this is after this sort of partial ceasefire was put into effect, these sort of the munitions that hit the hospital in Sumy, according to Zelensky, overnight, those were by drones made by the Iranians, right? And if this is sort of the idea to drive a wedge between Iran and Russia, and that's sort of Trump's goal, again, these are sort of relationships that have built up very robustly in the last couple of years, and it's not very clear exactly what Putin's position is going to be on sort of dissolving those, if these are people that have been sort of very sort of strong allies in a time when Russia was very, very isolated and is becoming less and less isolated. Of course, as you know, the great concern for the Europeans, for the Ukrainians, is that all of this sort of plays into Russia's hand, who basically has managed to sort of build a sort of side coalition and now increasingly has the Americans on board. And that is going to be a sort of very prominent topic over the next couple of days when EU leaders meet here in Brussels. We'll see what they can come up with on Friday.
Oliver, thanks very much. Bloomberg's Oliver Crook with the latest on Ukraine. And as he mentioned, at just gone at the top of the hour, so around 9:10 UK time, Oliver will be speaking to the deputy head of the Ukrainian president's office. So stay tuned with us for that conversation with Ihor Brashilo. So that'll be just after the top of the hour. Coming up, the Fed in focus, though, from a market perspective. Attention turns to Powell as the Trump put remains elusive. We will have the decision day preview for you next. This is Bloomberg. Welcome back to the opening trade. 8:51 here in London. We are waiting for the Fed. Remember, of course, it comes an hour earlier than we are used to from a European perspective because of the changes in the clocks in different geographies and when they happen. For the moment, then, we're back to that kind of holding pattern for European stocks. Yes, the DAX under pressure, down by 0.3%, but broadly speaking, we are pretty flat across European equities. We had a bit of a wobble around risk appetite, thanks to Turkey. More on that in a moment. But traders are seeking clarity from the Fed later today. With recession fears and uncertainty over Trump's economic policies, let's bring in Bloomberg's Valerie Teisel. Clarity is a big word. Valerie, are we right to expect clarity?
Well, I think what the market wants to know is Powell as bothered as economists are lately about the outlook for U.S. growth? And I think we're going to know this right when the statement is released. Previously, they always characterized GDP as being on a solid footing, on a solid pace. Do they drop those lines in the statement, perhaps foreshadowing that Powell does seem a bit more downbeat on the U.S. economy? Now, note, Powell spoke right before the blackout period. That was before this recent equity slide, and he still said that he thought that that the U.S. economy was on a solid footing. Does he maintain that kind of language, or does he perhaps have to shift that and in some way mark to market his expectations for GDP growth? And then, you know, on the same line, does he draw attention to this chart on the screen here, this recent rise in inflation expectations? This is something that the Fed has reacted to quite quickly before. Remember, it was only 2 summers ago that they surprisingly hiked by 75 basis points because this UMISH 5 to 10 year medium-term inflation expectations spiked. Does he instead focus on the inflation expectations? It's maybe a reason that they are in no hurry to cut anytime soon, and perhaps the market jumps to a conclusion that we could have the Fed on hold for all of 2025.
Does the Fed have enough information at this point? This is the challenge that they face. Powell's going into this with backward-looking economic data and forward-looking tariff policy that we don't know yet. And I'm wondering how he's going to marry those two in terms of actually his ability to lean on solid ground of what he knows about the economy. Relative to history, how uncertain is what we are looking at?
Well, look, Guy, you can almost argue that if Powell does harp on the fact that there is so much uncertainty out there, that could be seen as quite a hawkish narrative, right? He needs to actually see some of this supposed, economic weakness show up in the hard data, which it hasn't really yet. So if he does frame this as being, very uncertain, perhaps that just means that he wants to wait and see, which could mean they're in no hurry to cut.
The Timros piece this morning in the Journal, usually a kind of quite straight line, you could argue, into Fed thinking. Is that the precursor? Is that the kind of the heads up as to what actually we're going to get a little bit later on? Because when I read that this morning, I had a similar reaction to you. This is basically a hawkish message. We're going to lean on inflation. That's actually our primary concern. If that's the signal that we should be getting ready for, that's something that's going to unnerve the market.
Look, I think so, because it's almost implying that the Fed could look through some weakness in the labor market if we still have inflation expectations sitting uncomfortably high, which could essentially mean that the Fed would sit through some economic weakness until the certainty around where inflation could go around tariffs becomes a bit more, a bit more certain, whether that's in actual data or in the sentiment surveys that we have seen. So in some way, a wait and see approach could be viewed as a hawkish pivot from the Fed.
Now, any journalist who goes into that room and asks a question like, Chair Powell, is there a Fed put? Probably won't get a very straight answer. What kind of expectations do we have around any put in equities, in treasuries right now? Bring us up to speed on your thinking, Val.
Well, look, he would probably frame this response in talking about consumer sentiment actually leading to a pullback in consumer spending. Those two things aren't always correlated. Sometimes, yes, the consumer does turn a bit more pessimistic. We don't actually see that show up in the hard data. So if he couches that as something he's worried about, that this pullback in even business confidence is concerning him in terms of actually turning that into a hard data hit, in terms of, showing up in GDP, showing up in retail sales, showing up on the labor market, that could be in some way couching that as a dovish response to that kind of direct question.
I'm going to leave it there. Valerie doesn't have to stay up quite as late to watch the press conference.
It all happens at 6, doesn't it? Rather than 7.
So we can get through it before we get to bed a little bit later on. We'll be back here tomorrow morning, though, with a lot of analysis. What we're also looking at this morning is Turkish assets. So just a quick recap of kind of where we are. Under pressure. This is the mayor of Turkey, main political rival, you can argue,
the mayor
arrested.
of Istanbul.
Sorry, mayor of Istanbul. Simsek, the finance minister, out saying doing all we can to ensure market functioning. So there's a kind of message of the markets are still functioning. We can kind of factor this in. Don't worry, we've got this. He is seen as a safe pair of hands. So the fact that he's out early talking, I think, is quite significant and will be watched quite carefully by markets.
Yes, we'll watch to see what this move politically means for the economics and the economic policy in Turkey. We're also focusing on 10-cent numbers. Should just tell you about that. That's causing a little bit of a pop-up in the Prosus share price as we bring this hour of programming to a close. There you go, just up by 1% as we get those numbers from 10-cent. And, of course, Prosus has a share of 10 cents. So that's the read across there. That is it for the opening trade. Fed Day, as we've been saying later on. The brief, though, is up next. This is Bloomberg.